BBC TV18, celebrating 15 years of leadership.
Welcome to this week's edition of Taking Stock. This is the show where we prepare you for the coming week and discuss all the cues in the week gone by. I'm Sonia, and with me is Anuj. It was an interesting week, largely very quiet actually. So we had the Christmas holiday in between, and overall the range was very narrow. But by the end there was a bit of a negative bias in the market. So the Sensex and the Nifty were down about 0.5%. But slightly choppy, Anuj, for the market.
Indeed, Sonia. And in fact, this was the week in which we got a sense that maybe the correction is coming back for the market, though the volumes were low and the real trend would emerge next week. But to discuss all of this, we got a special guest. Andrew Holland, CEO of Ambit Investment Advisors, joins us right here in our studios. Andrew, hi.
Hi.
Good to have you in the studio, and first of all, Merry Christmas to you.
Merry Christmas to you.
What do you make of the current market scenario, and in the month of January or for 2015, what's your broader call? Do you think India would outperform, or is it now time to take stock of your positions and maybe take home some profits?
If you remember, Anuj, we were thinking that this correction was going to happen in January because of global events, so it's actually kind of preceded us in December. I think there's a few things to watch for between now and January. One, we've got the Greek elections on the 29th, so if that goes for the opposition party, that could have a bit more volatility for European markets. But I think January, February, I can still see the markets moving higher here because I think we're going to get interest rate cuts of at least 50 basis points, and I think that will propel the market higher. And of course, we're going to have the budget, which we're all going to have huge, high expectations.
So you believe we'll have an interest rate cut even before the union budget?
Yes, I think that could happen.
Okay. Andrew, hi. Merry Christmas to you and to your entire team actually at Ambit. What's the sense you're getting about whether one should put in money now, or should one wait for the budget to pan out before taking a decision?
No, I think now is a good time. I'm not worried about the longer term for India. You are going to get volatility, that's for sure, and we've seen that more recently in the past month. My concern is more towards, because the reforms are taking time to come through, is that the budget becomes one big event where everyone's expecting big bang reforms, every industry, every company is going to benefit, and it can't be like that. So I just worry that our expectations get too high before the budget, and then that lets us down. So that's the only concern I have in the very short term.
Okay. Just to discuss, a couple of pockets. In the week gone by, one of the big gainers was UltraTech Cement because of the deal that took place. In general, how are you positioned on the cement space? I mean, because many have been very bullish, expecting the economic revival to aid some of these cement stocks.
Yeah, no, it's not a sector we've been really participating in. I mean, we don't mind renting these sectors occasionally, but we think there's the big theme is this mega supply theme, and the RBI governor even said, whilst making India is good, it should be make for India. So that falls into our supply thing. So I think the operational gearing is in other sectors, auto parts suppliers and so forth. So not really the cement sector yet. I think that's probably the second half of the year where we look at.
Andrew, will have earnings season in January, and this could be volatile, right? I mean, you have IT, which could have some problems. Oil and gas clearly would have some problems. So is there a risk that the market gets a bit derated because of earnings season? Is that an outside risk?
No, I think we'll look beyond the earnings, but you're right. I think it's going to be a volatile earnings season. The IT sector, we've seen share prices move up only to come back down again. I think we're at the end of the IT story in terms of the huge growth that we've seen over the past decade. How much more can companies start to restructure? When they're sitting on trillions of dollars of cash in the US, how much more can they take out of the company? So I think the IT sector will see slower earnings growth, and I think it's just going to become more competitive. So we don't think the IT sector is something I need to be buying at this stage. I can't see earnings doubling over the next 2 years.
Okay. So Andrew, what would you buy? Because if your call is that the market would still go up from here and IT may not be the leader, in that case, where would the leadership come from? Would it still be banks, cyclicals, or would it be something else?
I think it's a combination, but I think the big leaders, a big theme for the first part of the year will be banks. Because we're thinking that if oil prices remain around these levels, then you could see at least 100 basis points off interest rates, and over a 2 to 3 year period, 300 basis points. So, if you go past the last cycle, the banks use that opportunity with the bond holdings to reduce the NPLs. So that will give them the growth of lending going forward as the economy starts to pick up. So we think banking is a big theme. Then we're going to start looking at all the highly indebted companies, where you're going to get financial gearing. We think we've got to be very careful in that. We're identifying companies now, but I spoke to one very heavily indebted company the other day, and even if you take 300 basis points off their interest costs, they still can't fund their working capital. So they have to turn away business because they can't take on any more projects. So that's the problem. So I think the theme will play out in the second half, but don't look at all of the heavily indebted companies because they won't be able to build the business, which is what you're really looking for.
And which is this company that you spoke to?
I'd love to tell you.
But okay.
You're not going to get that answer from Andrew.
But what about the global setup, Andrew? Because a couple of weeks ago, that was all that people were talking about. You know, the slowdown, the volatility in global markets. You think we've put the worst behind us? No,
I still think we've got more volatility. You know, we thought it was going to do something to do with China demand. Now, because China's not very transparent, I don't know if it's all been played out already. You know, the oil markets and the commodities and the FX have all played out, maybe a slowing demand in China. So maybe that's not the demand shock that we were expecting in January. So a lot of it's been played out, but I can still see oil coming back down again, NYMEX maybe to around the 50 level. So there's going to be a little bit more volatility in the commodities and FX markets, which will affect India, because that will affect emerging markets. So volatility, yes, but I still think because of our cuts in interest rates and the budget that our markets can still move higher.
Okay, Andrew, you know, this month, one sector which has been bogged down quite a bit is pharma because of what's been happening to Russia and, you know, a couple of other factors. Is this a good bargain right now, stocks like especially Dr. Reddy's, or would you wait for, you know, putting some fresh investments in Indian pharmaceutical stocks?
No, there's three sectors I'm kind of avoiding at the moment. It's all defensive: IT, consumer, and pharma. Okay. Because I can't see the earnings, you know, growing or doubling, where I can see in the cyclical sectors, I can see in suppliers where there's operational gearing. So, you know, this is the focus that we would like to have. Who supplies India, which sectors? So if it's all the auto companies, I want to know who supplies those parts, because that's where you're going to get the big increase in earnings. So, like the sectors longer term, but I don't need to pay 14, 15 or more when I'm not going to see that doubling in earnings.
All right, stay on for a bit. Let's first hear out a technical view coming in from Sudarshan Sukhani. He says that he'll be long on the market, still the Nifty breaks the 8100 levels. Listen in.
My view on the Nifty is very simple. We are on the long side of the market. Position traders have a stop loss at 8400. Don't disturb it. Be on the long side. If you're a short-term trader, if you were stopped out on 8180, enter the markets now. Your stops are also 8100. So the trend is sideways, but the trade is still to be on the long side until 8100 is broken on the downside. If it markets collapse, that's a different issue. Finally, a stock that's breaking out today, we all should be looking at it, and that's Bank of India. Bank of India is coming out of a small consolidation, a handsome move today. Just check your charts and your data. And at 300, it's crossing a large resistance. So there is something happening in PSU banks, and for today, Bank of India is an excellent buy for position traders and, of course, for people who want to carry for a day.
All right, let's take a break on that note. But before we do that, it's Christmas time, and here's Santa Claus with stock picks for 2015.
Santa's got a lot of help coming in from various brokerage firms. So let's kickstart with Macquarie. In fact, on Macquarie's picks for 2015 include the likes of Axis Bank, ICICI Bank, thrown a couple of heavyweights, L&T as well as TCS, and Maruti, the big outperformer. That one as well is part of the list. And from the mid-cap space, they're looking at Strides, JSW Energy. Pragya says that they're heavily leveraged or not, but Macquarie says that they're one of the picks for 2015. TVS Motors, Sonia has been telling us about the margins, but that's one of their picks as well. And Crompton Greaves and Yes Bank, both of them are part of that list. Moving on to Credit Suisse, they have a couple of heavyweights there. HCL Tech, HDFC as well as Maruti. They are the top stocks, and Havells that had seen a big correction just in the last few days. That one as well is one of their picks for 2015. But what does Morgan Stanley Sanders say? They say, in fact, that ITC, Infosys, as well as Sun Pharma, some of those defensives are part of their list. Maruti, Hero MotoCorp, as well as Bharat Forge, all of them are there from the auto space. And throw in there something like a Tata Motors, Tata Steel, as well as Tata Communications, all of them part of the list. ONGC, Oil India, and a couple of banks as well. HDFC Bank, Axis Bank, IDFC, and Bank of India, all of them are part of Morgan Stanley's lifts. But let's move on to Citi then. Citi says HCL Tech, BHEL, Tata Motors as well as ICICI Bank, watch out for them in 2015, and maybe by next Christmas, that's Christmas 2015, you'll be doing ho-ho-ho with them. Dr. Reddy's, Lupin, Oro Pharma, Axis Bank, as well as Adani Ports after that big run, yet they have it on the buy list. Citi's mid-cap stocks include the likes of Ashok Leyland, Exide, IDFC as well as Voltas, all of them part of that list. While throw in some other stocks like InfoEdge, Rima watches that very closely, and she's watching Santa closely at this point of time. So InfoEdge as well as Shobha Developers, all of them are part of the list. And finally, moving to PL picks in terms of the large cap space, a couple of Rima stocks are in here as well. So TCS as well as Infosys, both of them are in there. And Ekta stocks, the banks that trouble Ekta a lot. So SBI, HDFC Bank, ICICI Bank, as well as Bank of Baroda, they're all part of that list. And a couple of heavyweights, Pragya's big stock, L&T, you don't mess with her when L&T comes out with their numbers. So L&T is on the focus list, and for 2015, that's Prabhudas Leeladhar. And we have Tata Motors, Maruti Suzuki, as well as Oro Pharma. Finally, their mid-cap space from PL Santa's list are Mindtree, KPIT, Cummins, as well as we have Federal Bank, JK Lakshmi Cement, and Ashoka Buildcon.
CNBC TV 18, celebrating 15 years of leadership.